Equal access to and control over economic resources by men and women is a necessary condition to achieve gender equality. Some of you may argue that it is a mere feminist demand, but, in fact, economic empowerment of women is an essential condition towards sustainable economic growth and development. Assets are defined as stocks of financial, human, natural, or social resources that can be acquired, developed, transformed, improved, and transferred across generations. They can be tangible, such as land and financial capital, or less tangible, such as human capital. In this presentation, we will only focus on tangible economic assets, either financial or real assets. Economic resources refer to the direct factors of production, such as immovable assets, including land, housing, common pool resources, and infrastructure, as well as movable assets, such as productive equipment, technology, and livestock. Financial resources refer to money-based resources, including government expenditures, private financial flows, and official development assistance, as well as income, credit, savings, and remittances. In this presentation, we will see to which economic resources women may still be disadvantaged to have an access, why the access to these resources is important, and what the measurement issues specific to this subject are. Universal financial inclusion has become a priority on the political agenda of many countries. Why? Because access to finance is considered to play a crucial role for economic growth and poverty reduction. Moreover, access to financial services is a key factor for entrepreneurs in expanding their businesses. Given the important role of access to finance, a gender perspective towards the beneficiary of these resources is needed. Women's equal access to and control over economic and financial resources is critical for the achievement of gender equality, for the empowerment of women, and for equitable and sustainable economic growth and development. Both economic and financial resources have important implications for women's economic roles in sustaining household livelihoods, in labor markets, and in the wider economy. Equitable access and participation of women and men in decision-making is a necessary condition for women's interests to be taken into account. However, looking at the share of men and women at the key decision-making forums, the equality is far from being reached. Access to finance is broadly defined as access to financial products, such as deposits and loans, and access to services, such as insurance and equity products, at a reasonable cost. Access to finance can be seen as part of the financial inclusion approach, a new approach which brings a new perspective for analyzing the inequality within the financial sector. The new perspective differs from the one offered by microfinance for low-income people by enlarging the spectrum of financial service providers, looking at both formal and informal providers, including and promoting also partnership between those two. Financial institutions can be either formal or informal. The aim implied by financial inclusion mentioned in the previous slide is to increase the access to financial services regardless of the provider. Formal institutions include commercial banks, development banks, domestic or foreign credit unions. Other formal financial institutions are, for example, insurance companies, regulated microfinance, mutual funds, and pension funds. Informal institutions are, for example, moneylenders, pawn shops, non-governmental organizations, and unregulated microfinance. They can also be non-mediated financial services that involve friends or family. Financial services include provisions for transactions, such as paying bills and receiving remittances, savings instruments, credit, insurance, and pension. When it comes to legal access to financial services and ownership rights connected with accessing finance, all UNECE countries, except Turkmenistan, benefit from equal opportunities for men and women. Women's access to finance is problematic in many African countries, with Sudan as the most radical example. However, the gender differences in formal access rights capture only the most severe and obvious forms of gender inequalities related to finance. More subtle forms of gender inequality can be found in the business environment where both men and women are involved. Part of the general profile of a woman entrepreneur is to own a micro, small, or medium-sized firm. Among owners of large firms, men are in clear majority. Since the turnover and profit correlate with firm size, the outcomes related to economic prosperity are different for men and women. Regarding the economic activity, women's businesses seem to be concentrated mostly in the service sector, where usually the output is considered hard to quantify in the absence of physical assets, and this can represent a barrier in having access to finance. The opportunity of expanding businesses owned by women has become an important issue in achieving gender equality at this level. Barriers that can be addressed are related with unpaid work and access to financial services. The fact that women allocate a significant amount of time in unpaid work makes it difficult to obtain the same performance as men, who are allocating substantially less time in unpaid work. The graph shows the percentage of women in top management positions in several countries of Eastern Europe and Central Asia. Azerbaijan, Uzbekistan, and Tajikistan show the lowest percentages. The highest percentages are observed in Poland, Ukraine, and Estonia. However, even in these countries, the percentage remains below 1/3. While both men and women face barriers in accessing financial services, many studies suggest that these barriers are more challenging for women due to cultural attitudes, gender bias, restricted access to traditional collateral, such as land or property, restricted movement and domestic responsibilities, and the failure of financial institutions to target women through outreach strategies and financial products. Studies also show that women are more constrained than men in accessing startup loans, both in developed and developing countries. For example, in the United States, only 4.2% out of $19 billion in venture capital represented women-owned businesses in 2003. A recent study from the UK shows that women enter the micro-enterprise sector with about 1/3 of the starting capital as compared to men. Data from 34 countries, including those from Eastern Europe and Central Asia, showed that enterprises owned by women were 5.4 percentage points less likely to get a loan and were charged 0.5 percentage point higher interest rate than enterprises owned by men. A broad range of barriers to accessing financial services and products exist for women who plan to start a business. These barriers might be created by cultural attitudes and gender stereotypes deeply embedded in the society and at the community level. Or they might be of a more complex nature, being part of policies promoted by financial institutions and the legislative framework of a state. Cultural prejudice and practices strongly influence women's access to financing. A relevant example is the vulnerability of women married in community of property in South Africa. In COP, women are reduced to the status of minors, and their independent contractual rights are not observed. The experiences of women married in COP showed that they were required to have their husband's signature and approval for all banking transactions. This might have an undermining effect on women's business aspirations if their marriage partners are not supportive. In countries with limited or no property rights granted to women, access to collateral is directly related to low economic opportunity and financial services. Furthermore, a gender gap exists in accessing male-dominated informal networks as well. Being part of informal social networks in the world of business is associated with greater opportunities for business development, knowledge sharing, and access to timely information. Women, being in the minority and facing sociocultural barriers, might have difficulties in accessing these networks, which are male-dominated. Finally, little awareness of financial terminology and low business literacy is another access barrier with significant gender difference. Studies in this field show that women are more disadvantaged in terms of their knowledge of financial terminology and understanding of financial services than men. Other barriers are generated by the suppliers, such as financial institutions, but also legislators and policymakers who impact indirectly, through elaborated laws and policies, the overall access to financing by women. A part of the blame for the gender gap in financial access can be attributed to financial institutions, which lack technical know-how to design financial products and services that would respond to the needs of women who would like to enter the micro-enterprise sector. Financial institutions will have little impact on women entrepreneurs unless they apply more flexibility in loan crediting and less commercial assessment of the risk in an environment where many people do not have the advantage of long credit histories, good understanding of the financial environment, or acquired assets as collateral. Gender-neutral regulatory financial policies and legal framework elaborated to ensure security of financial transactions and to protect debtors' and creditors' rights might often lead to gender-differentiated outcomes. For instance, women may be less able than men to afford long and expensive registration procedures, thus being more disadvantaged than men in starting up or managing enterprises. A better understanding of women's savings and investment behavior and challenges they face is essential in order for governments and financial institutions to be able to address the bottlenecks of women's access to financial resources and develop appropriate financial mechanisms responsive to women's needs. Let's now go back to the indicator related to the rate of enterprises in the ECE region with women in top management positions and break it down by the size of the enterprise. The following graph shows a significant difference among small, medium, and large enterprises in terms of women's representation in decision-making positions. For this, a good example is Azerbaijan, where women hold top manager positions in 5% of small enterprises and 6% of medium enterprises. However, there is no single large enterprise that is led by a woman manager in Azerbaijan. The same trend is characteristic of other countries in the region, where the percentage of women among top managers decreases with the size of the enterprise. For example, in Poland, the percentage of enterprises led by women decreases from 35% in small enterprises to 17% in large enterprises. Access to finance is important for both men and women, since it opens economic opportunities, increases their well-being, and contributes to the economic development of a country, bringing about significant human developmental benefits. Improving access to finance for women in particular does not only reduce feminization of poverty, but also empowers women and strengthens their decision-making role in the household, community, and society. Enhancing women's access to finance and decision-making can contribute to minimizing the gender gap and promoting equal opportunities in the social and economic spheres. The Millennium Development Goals explicitly underline the correlation between economic progress and equal opportunities of women and men in society, and state gender equality as the compelling approach to achieving MDG goals. There are several tools that may be used to increase women's access to finance. Microfinance is one of them. Microfinance is a service provision which emerged in response to the failure of the formal financial system and the limitations of informal alternatives. Governments and commercial banks have become increasingly involved as sources of funds. What is micro about microfinance institutions is not the scale of their operations. Many have national and international coverage, but the amounts of money exchanged through their services. One of the defining features of the microfinance organizations has been their outreach to women. In 2007, such organizations reached 150 million clients, among whom 84% were women. Microfinance has thus partly compensated for women's restricted access to formal financial services. A range of other interventions might be used to increase women's access to financial products and services. Among good practice examples are the following: partnership of commercial banks with microfinance institutions to increase women's access to financial services and products. A successful example of increasing poor women's access to formal finance is provided by the partnership of so-called self-help groups with the banks. Self-help groups are mostly women's groups where women pool their savings and give loans to members. They are largely promoted and supported by non-governmental organizations. Gender mainstreaming within formal financial institutions includes a range of actions, such as gender-sensitive training for staff, outreach activities to facilitate women's access to financial services and products, use of gender-sensitive financial products, and provision of services. Specialized women's banks are banks that focus specifically on women's needs and engage in a set of actions that are meant to increase women's access to finance. An example is Mandeshi Women's Rural Cooperative Bank from India. The bank started its activity with a personal contribution of $10 from 500 women and managed to raise a startup capital of $15,000. The bank has since extended its services to 5 districts and 3 branches in India. Integrated credit registries represent a record of repayment histories, including microfinance repayments. They are especially efficient in the case of microfinance borrowers who lack formal credit histories required when applying for a bank loan. Integrated credit registries should provide sex disaggregated data. Increasing financial literacy and awareness can be achieved by providing gender-sensitive support to women on available financial services and products. Increasing women's representation in decision-making and providing more opportunities to women entrepreneurs can be achieved by giving women greater access to financial instruments, providing training and advisory services, and increasing their participation on advisory boards so that they can contribute to the formulation and review of policies and programs being developed by financial institutions. Sex disaggregated data represents an important tool for measuring women's access to finance. It can reveal the existent gaps across genders and allow a better evaluation and monitoring of implemented measures. Accurate, comparable, and reliable sex disaggregated data on access to finance will allow cross-country comparisons and awareness raising on access to finance across genders. Provide sex disaggregated data for governments and policymakers to identify existent barriers, monitor the implementation of policies, and measure progress on access to finance by women and men. Provide data for research and analysis of the impact of access to financial services and products on growth and poverty reduction. There has been little systematic analysis of access to financial resources and existent access barriers by gender. Measurement of access to finance has been largely based on the following 3 sources: data from regulators of financial services, that is, from suppliers of finance, data from financial institutions, also from suppliers, and data from individual and household surveys, that is, from users of finance. Accurate and relevant data on access to finance should include both the supply and demand sides. Data on the demand side should measure the impact of enhanced access to financing on the well-being of the household or the productivity of the enterprise. Collection of data on the supply side should measure barriers to the access to financing. Collection of sex-disaggregated data from these three sources is challenging from several points of view. Regulatory agencies, such as central banks, generally have little interest in collecting sex-disaggregated data on small loans, deposits, because their major concerns are with monetary and credit aggregates, inflation control, and maintenance of financial stability. At the same time, financial institutions do collect a wealth of information on the account holders, but there are several impediments to the collection of sex-disaggregated data. These include lack of a harmonized approach among financial institutions to record their financial activities and organization of data around accounts and aggregates rather than account holders. Finally, individual and household surveys have filled in the gap, providing data on the users and types of provided financial services and products in several countries. These surveys can also reveal how the use of finance may differ in relation to gender, race, income, employment status, or education. Such surveys contribute to an in-depth analysis of access to finance. However, they also have some limitations. Survey data are often not comparable across countries. They are costly and time-consuming, and cannot be used to monitor cross-country indicators. Despite the difficulty of collecting comparable sex-disaggregated data on access to finance, there are several cross-country databases and surveys that facilitate the collection of sex-disaggregated data on women's access to finance. Among them are the following: OECD Database on Gender Institutions and Development, Africa Gender and Development Index, Specialized Household Surveys, Enterprise Surveys. The OECD Gender Institutions and Development Database is a tool that helps to identify obstacles in women's engagement in the economic activity. This cross-country database covers 160 countries and provides 60 indicators on gender discrimination. The database harmonizes data from different sources and contains a set of variables on different dimensions, such as household behavior, social norms, or cultural and traditional practices. The database contains the following indicators on women's access to financial resources: women's access to land, women's access to bank loans, women's access to property other than land, mean age of marriage. Africa Gender and Development Index is another cross-country database which collects data on gender inequalities in African countries. The database contains a quantitative and a qualitative tool, the Gender Status Index, and the African Women's Progress Scoreboard. The AGDI indicators that measure access to finance are: ownership of urban plots or houses and land, access to credit, freedom to dispose of own income, management. Having been conducted in different countries since the 1980s, the Living Standard Measurement Survey is designed to explore linkages among the various assets and characteristics of the household on the one hand, and the actions of the government on the other hand. The Living Standard Measurement Survey collects credit and savings information at the household and individual levels, allowing gender disaggregated analysis of savings, credit, and access to financial services. The content of modules varies per surveys and countries. However, recent surveys contained useful information about crediting. For example, the 2001 survey from Bosnia and Herzegovina included in its module such questions as: how often the respondent borrowed from identified sources in the last 12 months, from whom, how much, and why the recent loan was obtained, why and by whom the loan was refused. An important tool for analyzing entrepreneurship from a gender perspective is the Enterprise Survey, conducted by the World Bank. This survey provides data about emerging markets and developing economies, covering more than 100,000 enterprises from 125 countries. The survey provides data on male and female entrepreneurs, women's representation in decision-making positions, and access to finance from a gender perspective. Percentage of firms with female participation in ownership, percentage of full-time female workers, percentage of female permanent full-time non-production workers, percentage of firms with a female top manager. In 2002, a list of recommendations on improving women's access to financial resources and collection of sex-disaggregated data on access to financing were elaborated by the Intergovernmental Expert Meeting organized by the United Nations Conference on Trade Development. Governments are urged to collect gender-disaggregated statistics on entrepreneurship and information and communication technology to better evaluate the gender impact of their policies. Encourage commercial banks to report the composition of their loan portfolios by gender of client. Support innovative financial incentives for women entrepreneurs, such as special credit lines, and promote linkages between lenders and business development service providers to support women entrepreneurs. Relevant international organizations should promote training programs for bank management and staff in order to sensitize them to the needs of women entrepreneurs and the potential benefits of reaching this underserved market. Relevant international organizations are urged to collect gender-disaggregated statistics in their field of specialization.